Welcome, investors, to the Absolute Return Podcast, your source for stock market analysis, global macro musings, and hedge fund investment strategies. Your hosts, Julian Klimachko and Michael Kesslering, aim to bring you the knowledge and analysis you need to become a more intelligent and wealthier investor. This episode is brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com.
Hey everybody, welcome to the Absolute Return Podcast. On today's show, we welcome special guests Brandon Sun, Cohen's Managing Director and Head of SPAC Investment Banking, and Christian Lopez, Cohen's Managing Director and Head of Blockchain and Digital Assets. Cohen is a full-service boutique investment bank focused on advising leading and emerging companies across sectors to address their strategic and financial opportunities. On the show, we discuss dynamics driving the momentum in the IPO market, trends in digital asset capital formation and crypto treasury companies, the evolution of digital assets within the capital markets, what investors can expect for the back half of the year, and more. So with no further ado, here's our show on IPO and digital asset market trends with Cohen's Head of SPAC Investment Banking, Brandon Sun, and Head of Blockchain and Digital Assets, Christian Lopez.
Excited for the show today. We have Brandon Sun, Managing Director and Head of SPAC Investment Banking, and Christian Lopez, Head of Blockchain and Digital Assets at Cohen. And Cohen is a firm that is still relatively new, but tearing up the league tables. I mean, you guys have been doing a lot of deals and came up very quickly to snag some major market share, M&A advisory, IPOs. What's your guys' secret sauce? You got a lot going on. Tell us about yourselves. Brandon, I'll let you go first.
Perfect. Julian, thank you so much for your time and the audience and the consideration here. So my background is I've been doing SPACs for about 13 years now. 3 years here at Cohen Company Capital Markets. Prior to this, that decade at Deutsche Bank. Pretty much spent my entire career in investment banking and SPACs, done about 130 SPAC IPOs, most of which are left lead. But more importantly, I've done about 130 de-SPACs, SPAC M&A deals. This is the most of any banker on earth. Done deals across every sector, every geography. But I think one thing that's been so exciting is this ramp up in the digital asset space. So I'm really excited to partner with Christian, who's doing some of the most innovative deals in the space here.
And Christian, what about yourself?
I guess that's a cue for me here. Thanks, Brandon. Yeah, so I had the digital asset team at Cohen. My background always in fintech, financial services, banking. Started off my career at UBS. Spent time at Guggenheim and then a merchant bank called Broadhaven Capital Partners that's really focused on market structure. I've been personally in Bitcoin since about 2016, and really have been trying to understand the ecosystem and kind of the monetary incentives that kind of drive the economy, right? Like global economy, and it all led me to Bitcoin, right? and sound money. And so when I came over to Cohen to help launch, the fintech practice, I took the opportunity to focus on the digital asset space. And so, in 2021, which is when we founded the firm and pretty much at the same time founded the digital asset team, at the time you mentioned the word Bitcoin or crypto, and most of Wall Street would run for the exits, right? They turned their back on the industry. It's for drug dealers and money laundering and, so on and so forth. We've all heard it. And sure, part of that is true. But as a matter of fact, those things exist on fiat rails at a much larger scale. And blockchain technology actually fixes a lot of that if it's used appropriately. And so we knew that there were smart entrepreneurs, developers, and serious people that were building on this new technology and said, hey, they need advice, right? They're going to need to participate in the capital markets. They need help on strategic advisory. They're going to need help on M&A. And so we took a bet on the ecosystem, despite, most of Wall Street and, Operation Choke Point 2.0 with the regulators turning their back on the space. And, listen, the bet's paid off. We've been extremely successful in helping our clients over the last several months and since the election, but even before that. But yeah, that's kind of me and, the practices we've built so far.
And we do have Vic on the show as a special guest. He needs no introduction. Multi-guesting on the Absolute Return podcast. Now, with that, the IPO market has been heating up significantly. I mean, last week we had Figma popping 250% on its IPO, which is the biggest IPO pop for an IPO above $1 billion in like 25 years. And then we had Circle Financial, stablecoin issuer, that rallied significantly. We had CoreWeave, AI infrastructure, data centers, also up several 100%. Then in addition to that, a SPAC IPO market that has really opened up, surge in issuance, most since kind of the bull market of 2021. What are your thoughts on what's driving this dynamic?
Yeah, no, thank you, Julian, for having me on again. And it's great to be on with old friends, Brandon and Christian. It's, Brandon's, we've been in the SPAC trenches for a decade plus now. And it's funny, Christian and one of our colleagues, Alex, they go back over a decade too. In the digital asset space, our guy Alex has traded more altcoins than I think anyone else that's not affiliated with a digital asset firm. And so he was super thrilled when we decided to partner up with the Cohen team on a digital asset SPAC, the CSLM Digital Asset Acquisition 3. And we're absolutely thrilled to have like the leading franchise in the digital asset space. And everything Christian said about, early movers, first movers, rings true. And after taking Bitcoin Depot public, I was laughing a little bit when you said that, Christian, because it's like the drug dealers and everything else. We got tarred and feathered, and Brandon Mitz and Scott Buchanan, who are the founders, run Bitcoin Depot, and you know them well, obviously. They really serious, credible people that like care deeply about the ecosystem, care deeply about digital asset economy, and so it's good to see that a lot of the regulatory pressure and other things that, we were facing during that transaction when the GSR Meteora SPAC moved forward with Bitcoin Depot are like completely out of the picture now. It's like a totally different environment in the Beltway, and we're excited about that. And that goes to your question, Julian, in the sense that, why have we seen the SPAC market pick up and the opportunity set pick up? Our view and what we're seeing as sponsors of SPACs, I sit as the CFO of Berto Acquisition, which Harry Yu is the CEO of after the successful DMYY SPAC franchise run that the Cohen team also was the underwriter on. We're seeing significant institutional interest and operating company interest against companies that, for operating companies that have proven business models, and the pipe investors are coming back to the market. Our opinion always has been that the front end piece is the easy piece. What really gets sponsors interested and gets institutional investors interested is when the capital formation process can come together against great private companies in the public market context, and you can create this public to private market arbitrage. And we've seen that. I mean, the league tables, I think the relevant league table is not how many front end SPACs can be raised. It's how many dollars of pipe capital can be raised. And, Brandon and Christian can tell you, I mean, the capital is just absolutely flowing in for good companies and, good opportunities. And I know we're going to get into the digital asset treasury strategy, and there's, a lot of back and forth on that. But to your point, your question, I don't believe sponsors would have come back. We wouldn't be pursuing this opportunity as sponsors if we didn't see a tremendous amount of interest from quality operating companies that want to use the SPAC vehicle to go public. And we think this is very different than the 2020, 2021 cycle, where it was just an overabundance, too many SPACs. There was 500, 600, 700 SPACs outstanding against maybe 100 to 200 from what we saw at the time, good private companies that made sense to go public through a SPAC. And I think that's something that kind of gets lost. There's plenty of great companies that are public, that could be public companies in the private markets, but there's not 1,000 great private companies that the SPAC is the right medium for them to go public. And so we've finally seen a equilibrium, as you will say, a balancing of the market where the regular way IPO markets found its footing to some degree, and the SPAC market as a tool to help companies go public as that next vehicle And I think that's why, Christian and Brandon 24/7, these guys probably haven't slept in like a year at this point.
Brandon, do you have any additional thoughts on the IPO market heating up, and specifically, what reasons should investors consider investing in a SPAC? And then on the other side, why should entrepreneurs, business leaders, and executive management consider taking their private company public via SPAC?
Yeah, no, thanks, Julian. I think with respect to investing in SPAC IPOs and de-SPACs, right, it's providing universal access, right? It's providing a democratization of finance where whether you're a retail investor, high net worth investor, right, institutional strategic, right, you get to participate in a SPAC IPO and make your own determination, right? And if this is a story you want to bet on, right, you have the same advantages as an institutional investor in a traditional IPO. So I think that's tremendously empowering, right, in this market that's quickly dynamic and quickly moving. I think on the target side, look, it's providing a lot of targets and entrepreneurs, CEOs, founders, right, a path to take control of their own destiny, right? With respect to timing, with respect to speed, with respect to valuation, right? Instead of waiting for a big bulge bracket bank to IPO you, right, on their terms, you're taking control of your own destiny, which I think is so powerful. For example, we took a company called Webull public just a few months ago, right, in a $5 valuation. They're trying years, right, to IPO, right? And they realized they just couldn't wait, right? They had such a great offering, such a powerful following that they needed to go public for strategic reasons. They did so through a SPAC, and it's done enormously well.
Yeah, it's really an interesting example of Webull. Now, Brandon, you did mention one thing with respect to the SPAC going public process, and that is speed. I know before the previous administration came into power, you could take a company public via SPAC in 3 to 4 months to complete the whole SEC approval process. And then, under Gensler's SEC, that slowed down fairly markedly. Are you seeing, along with, say, regulatory positive changes with respect to blockchain and antitrust regulation, are you seeing the same things out of the SEC with respect to kind of getting the speed that the SPAC structure was notable for? Is that coming back, or is it still kind of a tough process?
No, with respect to speed and access, it's currently there. I would say right now the SEC has been pretty constructive, right? If the company is ready with its audits and statements and disclosures, right? If you submit a proxy, you get comments back pretty quickly and appropriately, right? So in some ways, right, it really is kind of in the target's own hands. They can toggle the amount of preparedness and readiness, right? If they are there, it can move quickly. The SEC is just as reciprocal.
Great. And I did want to touch on current market dynamics. So, Christian, I was wondering, what are some of the most notable dynamics that you're seeing in the capital markets currently? Of course, one trend that is popular these days is crypto, digital assets, whether it's crypto treasury companies. We had a couple large SPAC mergers announced, 21 Capital, Reserve One. You had several large ones go public via RTOs. Those are fairly popular. Some big Ethereum-based crypto treasury companies, and then also, the traditional IPOs, traditional M&A, and things of that nature. Some interesting spin-offs as well, but a lot in the crypto. But general AI is of course super interesting as well. Power and utilities, things of that nature. So, what are some of the most notable dynamics that interest you these days?
Yeah, I mean, Julian, so much going on in the market, and I think a lot of the reason is because of improved economic conditions. The lower interest rates, or at least the anticipation of lower interest rates coming down the pipeline, means that capital is getting less expensive. And so, investors are more likely to put that capital at risk in more risk assets. And you got to remember, with me, my lens is really towards kind of what is the macroeconomic condition of the global economy. And, time and time again, when sovereign debt starts getting so large that, interest payments aren't able to be made without doing something to stimulate the economy or monetize that debt, that's when the money printing comes, right? That's when interest rates start being cut. So we're in a really interesting situation where, Donald Trump is trying to lower the cost of debt for the United States and globally, but that's in the face of inflation that is continuing to be sticky. And so there's a battle between Jerome Powell and Donald regarding the interest rates because, they have different interests. But time and time again, through every cycle, what happens is the United States and really like the global power that exists during that time will monetize the debt and therefore, tax the broader population, meaning, folks like you and me and globally through inflation. And so what does that mean? It just means more money printing. And where does that money go? It goes into risk assets and things that keep up or at least beat the price of inflation. So with that kind of lens in place, then what does that mean? Like, what are the exciting trades right now where you could put that risk capital to work? Well, it's, AI, right? Like, I don't know the exact statistic, but I think Facebook itself or Meta has put, several $100 billion to work into AI or will over the next several years. And then, of course, the next trade is crypto, blockchain technology. There's a bunch of regulatory optimism around crypto. I mean, Vic, you kind of alluded to this. Like, we're not, it's not even like we did a 180 on crypto. We're in a completely different dimension from a regulatory perspective. I mean, Paul Atkins just came out with like a new policy to accelerate American leadership in digital, finance, and he called it Project Crypto.
Yeah,
right?
exactly. Yeah.
Like, imagine like, 12 months ago or plus, before the new administration came in, they were killing deals in the market. It would take 24 months. Like, I think some of these like deals that went out that companies going public, crypto companies, mainly Bitcoin miners, there would be dozens and dozens of comment letters from the SEC that, effectively quietly killed any sort of crypto deal. And fast forward to today, you're getting done, pretty efficiently, right? For example, and this is public, but the Nakamoto merger that we just did, right, with David Bailey and raised $750 million to go buy Bitcoin. He's got a bunch of businesses, BTC Inc., UTXO. There was, I think, 5 or 6 comments that the SEC had, and we're going to get that deal across the finish line in just over 3 months.
Wow,
that's record speed for any merger in the public markets, let alone a crypto-related transaction.
That's really great to see because I think it's just a damn shame what happened to Circle, which had a business combination to go public via SPAC. I believe initially had a $4 billion valuation. After some delays, that was repriced and ultimately got killed just because they couldn't get the requisite SEC approval. Then a few years later goes public via traditional S1 at a way higher valuation. And who loses out there? Individual investors, retail investors are now paying 10 times the initial valuation just because the SEC was anti-crypto. But certainly great to see things changing there. I don't think this show would be complete without at least a discussion on crypto treasury companies, which have been all the rage. But then there's some thinking, do we need any more of these? What's going to happen to these investments? Of course, Strategy, MSTR was and is kind of the market there. I think they probably have, in terms of digital asset treasury companies, 90% market share just due to their massive market capitalization and stash of Bitcoins. What are you guys' opinions on digital asset treasury companies, and what do you think is in store for them in the future? And can the market handle any more of these, or is it saturated?
Yeah, maybe I could take that one, and Brandon, feel free to layer in there. So yeah, it is a hot trade, and I think you'll continue to see treasury deals in the market. I mean, we announced one this morning. It's the TON treasury strategy. TON is the Telegram native token, and there's a lot of really exciting things going on in the TON and the Telegram ecosystem. Really an integrated, a partnership with the foundation and with Telegram. Telegram itself has over 1 billion monthly active users. It's the 4th largest, super app globally. after I think it's Meta WhatsApp, like Facebook Messenger, WeChat, and then it's Telegram. And the TON ecosystem will be the main payment form and just highly integrated into the deal. So you're going to start seeing like real use cases with these like crypto treasury companies, right? Like these crypto treasury guys or crypto guys, really, they've built the blockchain with a purpose to go build something real. Some of these larger ones, right? Like Solana, Avalanche, Ethereum, Bitcoin, they all have specific use cases. And we have now, the regulatory environment has opened up for those ecosystems to actually go do in a regulated way, in a public way, where investors can put the capital behind that to make it work. So I think you'll still continue to see it. Will there be 100 ETH plays or 100 Bitcoin plays that trade at a 3 times MNAV? I don't think so. Just like there's not going to be 150 publicly traded Bitcoin miners or 200 publicly traded AI companies. Ultimately, these things consolidate, and there will be winners and losers, right? Like think back to the .com bubble. There were a ton of internet companies, and a few winners. And that's just kind of the natural cycle of new industries with respect to the growth as private companies into VC and then into the public markets. Now, these treasury companies, I think, will ultimately, they act as permanent capital vehicles. So think of like BDCs or REITs. Those industries in the public markets trade at a premium to their net asset value. And there's multiple reasons for that. I mean, one, in real estate in particular, there's the expectation that the price of real estate is going to increase over time. And much of that is due to inflation. And we could talk about that. I could go on that, but we'll save it there. And then, of course, the implied yield that you generate from rents or from mortgages, right? So it's going to trade at some premium to book value. Bitcoin in particular, Bitcoin treasuries will trade at a premium to book value on the anticipation that the price will increase over time because it's got a perfectly finite supply, right? So as global governments print money, that money is going to be filtered into risk assets, and Bitcoin, gold, and equities, et cetera, will benefit from that. Bitcoin the most because it's perfectly scarce, perfectly finite. And then you got other cryptos like the proof of stake cryptos, which generate native yield on their blockchain through transaction verification, right? And so I do think you'll continue to see trades. There's going to be winners and there's going to be losers, but I think it's a very healthy ecosystem so far.
Yeah, I would add in that we're in inning like 1 or 2 of this opportunity. The private markets have been the only source of capital for the digital asset economy. Today, like on Saturday, I had dinner with a friend of mine who we had made a small seed investment into his blockchain for tokenization company. And they're doing like 10 million in revenue. And he just saw that like digital assets, the Canton network had raised, I think it was like 150 million led by DRW Ventures. And he's like, where can I do that? Like, he knows we have this SPAC that's going public, and we're like, hey, no pre-baking, whatever. And I'm like, but you're too small. But he's like, it's a 10 million revenue company that he can raise institutional funding at 50 to 75 now. Whereas he told me a year ago, it was so hard to get his phone calls returned. And wow. Christian and Brandon probably have the data better, but there's billions of dollars in the private markets that are looking for an exit in the public markets now that we have a much cleaner regulatory environment. I was kind of laughing when you guys were talking about the deals getting killed. I mean, our poor Bitcoin Depot transaction, we were stuck in the office of Finbit or whatever, his office of digital currency. I forget whatever the hell they renamed it. I think those guys are all gone now. But 3 rounds of comments in that division alone, where it was just asking the same question in a different way. And to Christian's point, there was like this sense that they're not going to block the deal because there's no legal basis to block the deal moving forward, but they'll sure as heck try to do everything to like delay you, slow you down, and things of that sort. And so I think what we're seeing in the public markets, what we're seeing with Circle trading up 500-600% off the IPO, is that the public, and even on a second sense to Brandon's comment, like Figma, right? Figma had a fantastic day 1, day 2 reception, and Bill Gurley went on one of his tweet storms. He busted it out of the archives about how mispriced the IPO processes and how
money on the table
it is to the exactly. You saw it. Yeah, I see you smiling there. You read it too, and he had the same thing a few years ago, and he's been a big proponent of SPACs in various forms and shapes, and that's what we're seeing in particular with the digital asset opportunity. And my opinion, and from what we're seeing as an investor and sponsor, is the treasury trade is the first trade. It's the easiest trade. Like dealing with operating companies, having further clarity in the regulatory landscape is needed. It's coming. It's come. The last couple of weeks have been, very helpful. But you're going to start seeing significant opportunities from SPACs and regular way IPOs of companies in the digital asset economy ecosystem. And the amount of capital coming into these companies in the private markets, it's just a precursor, in my opinion, for what we're going to see in the public markets. Like, you can't have this mismatch in capital flows where billions of dollars are flowing into companies in the private markets, and the public markets are just like are just completely walled off from that investment opportunity. That's just not how it works. And that's exactly what SPACs were created for. They were to bring those opportunities to the public markets that the private markets historically have had a fiefdom or domain over. And so, as we're talking to venture capitalists in the ecosystem that are wanting to take their companies public, they've had the benefit of seeing how this has played out over the last 3-4 years. And our belief is this deals will be structured in a more prudent, modest valuation where you do leave money on the table, but you create a win-win and a sustainable public company versus trying to top tick the valuation on a company. And so that's what excites us as a sponsor of these vehicles. I'm certain that's what, keeps these guys super motivated day to day to kind of grind it out. And I think that's manifests itself to date in the number of IPOs and the IPO volume picking up. And there being, I think Christian and Brandon could tell you better, there's probably been 10 or so digital asset focused vehicles raised to date. And certainly that doesn't preclude other vehicles from participating in the digital asset opportunity, but ones with teams that have the relevant pedigree expertise in the asset class. This is, in my opinion, the best way to, participate in that potential for the next circle or the next bullish, which, as you mentioned, Julian, were both companies that should have gone public and would have gone public through SPACs if it weren't for the powers that be being so hostile towards the digital asset economy.
And you brought up a couple dynamics I wanted to double click on. The first being, you look at some of these pipes, and the pipe market with respect to SPAC mergers has come roaring back. And what I found very interesting is you look at the names participating in these pipes, and it would not be what you'd expect. Digital asset firms that typically focus on tokens, and venture capital firms that typically focus on the private markets, not the public markets. Is that a dynamic that you guys found, pretty shocking at the start? And do you think that'll continue?
Well, I don't think, I'm not shocked that the private, crypto VCs are participating in the digital asset trade. Makes all the sense in the world, looking for liquidity, excited to invest in the ecosystems that they've also supported over the last, however long they've been invested in the various ecosystems. The TradFi guys as well, there's a lot of, crypto bulls globally. And a lot of them are, sitting within the walls of highly regulated institutions. And many of them are smart folks who understand technology, who understand the macro. And probably, behind the scenes, a lot of them were fighting for crypto to make it onto Wall Street and to be approved by, get the stamp of approval from the regulators. That's how we got here, right? Is through grassroots movement, not just the developers, but the investors who are like, what are you guys doing? This is the next evolution of financial technology. You can't stop it, and if you try to stop it, you're going to be on the losing side. And it reminds me of when the automobile was invented or when electricity was invented, there were people fighting hard, candles are better. These, electricity thing is going away. And, horses are the best way of transportation. These automobiles are, it's a fad. This is a true financial technology revolution, and you can't stop something like that.
Right. And the second dynamic I did want to touch on is when you hear about private markets, mostly private equity, a bit of venture capital, you hear some frustration from LPs saying, oh, there's no liquidity, there's no distributions, they're focusing on DPI and things of that nature. And then there's things such as secondaries and continuation funds and things of that nature where they're trying to manufacture this liquidity. What's been expected for a while is liquidity via the public markets, either traditional IPO or SPAC merger. Do you think that's something that we're going to see kind of in the back half of the year, more private equity and VC type companies going public using these vehicles?
Yeah,
I'm happy to take that. I think for private equity firms, it's still probably going to be challenging, at least in the short term, right? Because of this kind of emphasis on DPI. But I think it's obvious, right? There's so many sectors. They're undergoing this phenomenon where there's such a powerful public-private arbitrage, right? Company CEOs, shareholders, right? It'd almost be irresponsible to not to, right? I'll give you a couple examples, right? The rare earth sector, right? Because of the executive order, because of the Pentagon investment, right? Rare earth and SMRs, right? A lot of these critical material companies are trading at massive premiums, right? MP Materials, which is a D-SPAC, trading at $60. Oklo, which is a D-SPAC, which is trading at $75, right? New Skills D-SPAC trading at $50. These sectors, right, are getting disrupted, right? And simply by being public, you have this virtuous kind of flywheel where you're going to get potentially DoD funding, DOE funding, potentially government and strategic support, right? So it's obvious. Other sectors such as quantum computing, AI, same thing, right? You have this public-private arbitrage where not only are the multiples higher, right, but being in public markets also benefits you from more demand from a wider and stronger institutional retail investor base. It is the right play. So I do think over the next 2 or 3 quarters especially, you're going to see all these companies and boards basically put the go public process, right, as potentially a major priority. And it's just a matter of how quickly they can go public, right? You could either do an IPO, which takes 9 months, or you could do a D-SPAC, right, and explore that within a few weeks. Right now, there's 1,000 companies, right, that have either confidentially or publicly filed for S1s, right? They're all stuck, right? So I think where you're going to see a lot of these companies and these disruptive emerging technologies do is potentially accelerate that path through SPACs. So I think it's a really exciting time to be a SPAC sponsor for people like Big and others.
And with that, whenever I hear, private equity sponsors or executives thinking about this, the window is wide open right now. And it'd be a shame if they miss it because these things are cyclical, as we've all seen over the past several years. Now, prior to letting you guys go, I did want your insights into, what can investors expect into the back half of 2025? And
so, yeah, Julian, we're in the quiet period, so we can't say a whole lot about it, but we filed a CSLM Digital Asset Acquisition 3 vehicle with Cohen and Co. And, Brandon and Christian, we've been working on this thing for a year now. And this one, I don't know, the prospectus has all the great details and we're focused on new emerging technology in the frontier economy. Maybe Christian and Brandon understand it better in terms of the pace of deregulation we've seen. I don't when you talk to folks in the digital asset economy and you joke with them and you're like, did you imagine this was your life a year ago? They're like, dude, I didn't imagine this 3 months ago. It's like, I don't think people understood when David Sachs was appointed the crypto czar and AI czar, what that really meant, except for a handful of, first movers and forward thinkers that were able to. And credit to Christian and his team that have been there since early days in this ecosystem, and it's been a difficult slog. And we saw it with Bitcoin Depot, and it's just night and day. And that's why you see the level of celebration isn't because we're all getting super rich or something. It's because finally we're able to operate in the lightness of day kind of thing, as opposed to hiding out in darkness. And so it's really been a credit to the current administration. President Trump has really taken the real lead in this. He's put the right people in place, from Paul Atkins at the SEC to David Sachs, and there's just layers upon layers of professionals in government that are being much more thoughtful and methodical in how they approach this opportunity, and it's just a welcome turn. I think it's ultimately going to secure the future of America.
Great. And Brandon, Christian, any thoughts on what investors can expect in the back half of the year?
I think just a lot of renewed and increased activity, Julian, like Vic said, right? This sector continues to change day by day, right? And it's being reimagined as we speak. So I think a lot of these deals, right, there are gestation periods, right? I do think in the next few weeks, few months, we're going to see the kind of the fruits of that labor. So I'm really excited for a back half of 2025. I think there's be dozens of SPAC IPOs and de-SPACs off of this momentum here. And maybe I'll pass it to Christian for his final words.
Yeah, I mean, the ecosystem continues to draw a ton of investor interest. And I think you're going to start seeing a slew of public listings, whether de-SPACs, IPOs, et cetera. You've already seen the first iteration, right, through Circle and eToro, and I think Bullish just announced this morning or earlier this, maybe it was last week. So you're going to continue to see that. The playing field is now even for crypto companies, and they're going to come out with a strong bang. Right? These are real businesses that are generating a ton of value for investors, for the users. There's no reason why we need to keep them trapped under regulatory, pressures. They've been unleashed, and I think you'll see how strong of businesses these are.
Yeah, and with that, I think this is a process, the capital formation process, that should be celebrated by everyone, because you look at the kind of what's happened over the past 25 years, a dramatic decline in public market listings in the U.S. from 10,000 to like 4,000. And it'd be a damn shame if in 25 years we're down to 7 public companies. So in my opinion, the more the merrier, the more opportunity for investors. And we don't want all the action only happening strictly in the private market. So you guys are fighting a good fight. Thanks, Brandon, Christian, Vic, for coming on the show today. Always interesting to get your point of view in various segments of this market, and hopefully we continue to see this capital formation and deal activity continue to grow, because it was a tough slog there for a while under a fairly tight and punitive regulatory regime, but it's a real breath of fresh air to see the shackles come off and a lot of businesses thrive under the new market environment. So thanks, guys. Really appreciate it.
Thank you for having us, guys.
Thanks for tuning in to the Absolute Return Podcast. This episode was brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com. The views expressed in this podcast are the personal views of the participants and do not reflect the views of Accelerate. No aspect of this podcast constitutes investment, legal, or tax advice. Opinions expressed in this podcast should not be viewed as a recommendation or solicitation of an offer to buy or sell any securities or investment strategies. The information and opinions in this podcast are based on current market conditions and may fluctuate and change in the future. No representation or warranty, expressed or implied, is made on behalf of Accelerate as to the accuracy or completeness of the information contained in this podcast. Accelerate does not accept any liability for any direct, indirect, or consequential loss or damage suffered by any person as a result of relying on all or any part of this podcast, and any liability is expressly disclaimed.